Welcome in, everybody, to a deep dive into Tata Consultancy Services. You know them as TCS. We're looking at their Q3 performance for fiscal year 2024. And we've got a whole lot of stuff here. We've got company reports, financial statements. We've even got auditor opinions. It's a real treasure trove. You ready to decode what these numbers really mean for you?
Absolutely. We're going to be going beyond just the headlines, dissecting these documents, try to pull out some insightful nuggets that can really help you understand TCS.
All right, so first up, there's this dividend bonanza that has got everyone talking.
Yeah.
TCS announced this third interim dividend of INR 10 per share and a special dividend of 66 per share. So that totals a whopping INR 76 per share. Is this just I don't know, is this a feel-good gesture?
Yeah.
Or is there something more to this story?
Special dividends are often seen as a signal of a company's confidence in its future prospects. It suggests that they believe, that they're in a good position, not only to reward shareholders now, but also to invest in future growth.
So are these dividends backed up by solid Q3 performance? Let's find out. Consolidated revenue came in at INR 63,973 crore. Now, that is a slight dip from the previous quarter, but it's still a year-on-year increase. So how should we be interpreting this?
Yeah, so while a sequential dip might raise some eyebrows, it's really important to consider the global economic backdrop. A lot of companies right now are facing some serious headwinds. So seeing a year-on-year increase in this current climate, it actually points to resilience.
Okay, so navigating a tricky economic environment while still growing, that's pretty impressive. But what about the bottom line? How are their profits looking?
Their profit before tax stands at a healthy INR 16,666 crore. And this really suggests efficient operations and smart cost management, both of which are vital for that sustainable growth.
Now let's zoom in on some of those juicy segment details. The banking, financial services, and insurance sector, we'll call it BFSI for short, is a real powerhouse for TCS. It pulled in a massive INR 23,481 crore in Q3.
Yeah.
So what's driving this dominance?
Well, the BFSI sector is undergoing this rapid digital transformation, and TCS is really capitalizing on that trend. They're providing solutions for everything from core banking modernization to customer experience enhancement.
Interesting. So they're strategically positioned to really ride this digital wave, but not all segments are performing equally well. The communication, media, and technology segment, CMT we'll call that one, saw a dip in Q3. Should we be concerned?
A dip in a single quarter. It doesn't necessarily signal a long-term trend. However, it's definitely something to watch. Is it a temporary blip due to external factors, or does it point to some, deeper challenges within the CMT sector?
Great point. Now let's pull out that peer comparison table and see how TCS stacks up against their competition. Their return on equity, or ROE, sits at a remarkable 51.5%. That's significantly higher than the industry average. What does that tell us about TCS's performance?
Well, ROE is a key measure of how effectively a company is using shareholder investments to generate profits. And TCS's high ROE, it suggests that they're masters of efficiency. They're squeezing more value out of every rupee invested compared to their peers.
That's pretty impressive. So they're not just growing, they're doing it in a highly efficient manner.
Exactly. This efficiency is likely a combination of factors, including, strong profit margins, smart asset utilization, and potentially even strategic use of debt. We'll need to dig deeper to really understand the specific drivers.
Before we do that, let's talk about trust and transparency. Both the standalone and the consolidated financial statements received an unmodified opinion from the independent auditors. Now, for those of you not familiar with auditing jargon, what does this actually mean?
An unmodified opinion is essentially a clean bill of health from the auditors. It means that they found no material misstatements in the financial reports, which really boosts our confidence in the accuracy and the reliability of those numbers.
Okay, so we've got a company that is showering their shareholders with dividends, demonstrating resilience in a challenging economic environment. They're boasting impressive profitability and efficiency, and all with financial statements that have passed the audit test with flying colors. It sounds like a pretty compelling story so far. But let's not get ahead of ourselves. Are there any cracks beneath this seemingly pristine surface?
That's the beauty of a deep dive. We don't just skim the surface. We peel back the layers to see what's really going on underneath. That's kind of what we try to do with these deep dives. We don't just want to skim the surface. We want to peel back those layers, see what's really going on.
Right. So where do we start peeling? What should we examine next to really get a more nuanced understanding of TCS?
The profit and loss statement. offers a detailed breakdown of their revenue and expenses over time. And this can reveal some really interesting trends and patterns.
Okay, but looking at the statement now, what's catching your eye?
Look at how consistently TCS has grown its operating profit over the years, even during, like tough economic times. They've managed to maintain these healthy margins. That's a real sign of a well-managed business.
Yeah, their operating profit margin is consistently hovered around that 27% mark. So they're clearly doing something right. But what exactly contributes to this consistent profitability?
It's likely a combination of factors. They might have strong pricing power, allowing them to command those premium rates for their services. Or they could be incredibly efficient at managing costs, keeping those expenses under control. To really know for sure, we'd need to dig deeper into those operational details.
Now, something else that stands out to me is their relatively low interest expense. Does this mean that they're playing it safe and avoiding debt?
TCS has very little debt compared to some of their peers. This suggests a conservative financial approach, which can be a good thing. It means they're not over-leveraged and are less vulnerable to interest rate fluctuations.
Makes sense. Carrying less debt also frees up more cash flow for other things like investments, dividends, or even share buybacks. Speaking of which, I see that they had a significant buyback program last fiscal year.
Yeah, that's another indication of their financial strength. They were able to return, a large chunk of capital to shareholders. And buybacks can boost those earnings per share, making the stock more attractive to investors.
All right, let's shift gears a little bit and take a look at the balance sheet. Now, this gives us a snapshot of TCS's financial position, what they own and what they owe. Anything jump out at you right away?
The first thing that grabs my attention is the sheer size of their reserves. It's a massive number, which indicates that they've been consistently profitable and they've accumulated, a substantial financial cushion.
Yeah, that's a big pile of cash. So what does this huge reserve tell us about TCS's strategy?
It suggests a couple of things. First, they're fiscally prudent. They're prioritizing long-term stability. And second, they're likely preparing for the future, whether that means weathering economic storms, investing in growth opportunities, or even making strategic acquisitions.
Okay, so they're playing the long game and building that fortress balance sheet. Now, I'm curious about their investments. What do they hold in their portfolio? Are they taking any risks with that cash?
Unfortunately, this particular source doesn't give us a detailed breakdown of their investments. But given their strong cash flow and conservative approach, we can kind of infer that a significant portion is likely held in those liquid assets, like cash and cash equivalents.
So they're keeping their powder dry, ready to seize opportunities when they arise. Makes sense. Now let's dive into the cash flow statement. This tracks the movement of cash in and out of TCS.
Right, and this statement is crucial for understanding TCS's operational efficiency and their ability to generate free cash flow. And free cash flow is kind of the lifeblood of a company, allowing them to invest, pay dividends, and even buy back those shares.
Looking at their cash flow from operations, it's consistently strong. They're clearly generating more than enough cash to cover their operating expenses and investments.
Yeah, and remember that significant cash that they've returned to shareholders through dividends and buybacks. Well, the cash flow statement shows us exactly how they're funding those shareholder-friendly initiatives.
All right, time to crunch some numbers. Let's move on to the ratios section. This is where we can compare TCS's performance against industry benchmarks and get a more nuanced view of their financial health.
Yeah, ratios are powerful tools for analysis. They can help us understand the relationships between different financial figures and can highlight those areas of strength or even potential concern.
One ratio that kind of jumps out at me is their debtor days. It's relatively high, suggesting it takes them a while to collect those payments from clients. Is that a red flag?
Not necessarily. Long payment cycles can be pretty common in the IT services industry, especially when you're dealing with those large contracts.
Oh, so it's more of an industry-specific quirk than a cause for alarm. Good to know. Now, on the flip side, their ROCE, or return on capital employed, is exceptionally high. What does that tell us about their operational efficiency?
Well, ROCE measures how effectively a company is generating profits from the capital it employs, and TCS's high ROCE indicates that they're making those smart investments and utilizing their resources effectively.
So they're not just generating a lot of cash, they're also using it wisely to generate even more returns. That's impressive.
It is, and it really reinforces that image of TCS as a well-managed company with a keen focus on efficiency and profitability.
Before we wrap up this part of our deep dive, let's take a moment to check in with our listeners. What's standing out to you so far? Are there any specific areas that you'd like us to explore further? So we've covered a lot of ground, from those dividends and revenue to the cash flow and ratios. But there's one piece of the puzzle that I'm still curious about, TCS's shareholding pattern. Who are the major players that are holding those stakes in the company? And what does that tell us about, their influence?
Yeah, that's a great question. And understanding the shareholding structure, it can offer some valuable insights into a company's dynamics, but unfortunately, the screener.com data we're looking at, it doesn't provide those specifics to get that level of detail we'd need to delve into, like their annual report or investor presentations.
Okay, so I'll have to add that to our list for further investigation. But for now, let's try to, step back and connect all the dots. What does all of this financial data tell us about TCS's overall health and strategic direction?
Well, based on everything that we've explored so far, TCS appears to be, a financially robust company with a clear commitment to consistent growth, profitability, and delivering value to shareholders. They've demonstrated resilience amidst, all this global economic uncertainty, and their strategic focus on that BFSI sector, it seems to be paying off pretty handsomely.
And it's impressive how they've managed to maintain those high profitability and efficiency levels while also rewarding investors with those dividends and buybacks. It suggests, a well-balanced approach to both growth and shareholder returns.
Precisely, however, we shouldn't overlook that dip in the CMT segment. That definitely warrants further scrutiny. Is it a temporary setback or a sign of deeper shifts within that particular industry? And answering that question, it requires a broader perspective, looking beyond just TCS's financials and examining, those overall market dynamics.
Yeah, that's a great point. It reminds us that financial data is just one piece of the puzzle to get the complete picture we need to consider those external factors, the industry trends, and even, geopolitical events.
Absolutely. And that's the beauty of a deep dive like this. It's not about, providing those definitive answers, but rather equipping you, the listener, with the knowledge and tools to draw your own informed conclusions.
So as we wrap up this exploration of TCS's Q3 performance, remember these insights are just the starting point. Use them to spark your own research, delve deeper into those areas that pique your interest, and ultimately form your own perspective on TCS's future trajectory.
Yeah, there's always more to learn, more layers to uncover, and more insights to discover. Stay curious and keep asking those insightful questions.
Well, thanks for joining us on this fascinating journey. Until next time, keep diving deep.